Adriatic Metals has just listed in London, having launched its life as a public company in Australia. With its high-grade zinc project in Bosnia-Herzegovina, it's come to London at a time when it keeps finding more resource. And recently adding to its zinc is now also finding silver and also gold. Joining us now is Adriatic's chief, Paul Cronin, who was recently awarded CEO of the Year at the Mines and Money event in London.
Thanks,
Paul,
Jeremy.
Welcome and congratulations on your new title.
Thank you very much.
Now, I know you've been with Adriatic for some little time now, and in fact, you've just been telling me you inherited or bought a box of papers which pointed you towards Bosnia-Herzegovina as a good place to start drilling, and it all seems to be coming up trumps at the moment.
Yeah, essentially, back in 2017, we founded Adriatic. It's a UK PLC. Yeah. We bought a mining concession in Bosnia and Herzegovina. With that came some freehold land and buildings, and in those buildings we found thousands of pages of records of historical exploration work that had been done. We digitised that. We spent a lot of time reviewing it, remodelled it up, and decided to get in there and do some more drilling ourselves. And you know, that drilling has been hugely successful. We've taken it from nothing to now global resources of over 17 million tonnes.
Now, my understanding was it all started off with the promise of some zinc.
Yeah, initially we were told that there was, well, we knew that there was an old lead zinc operation there. Right. What we were really surprised to find was precious metals, in particular silver. The silver grades in this deposit are extraordinary.
This is quite a new development as well, isn't it?
It is. I mean, from the very first drill hole we saw there was silver, but it's more of our recent drilling where we've really intercepted some high-grade silver. Right. The deposit just keeps giving. Every drill hole we put in is giving us some valuable information. Some of our hits have just been enormous in terms of the thickness of the intercepts, the grade of the intercepts. So I think our best one to date is 72 metres, grading roughly 44% zinc equivalent. I mean, that's enormous.
Yeah, and you've just literally, as we speak, just listing in London for the first time, which is interesting. I mean, having listed already in Australia, you've already got a track record. We'll take a look at the share price in just a minute. But in terms of the reasons for listing in London, having had a successful list in Australia?
Well, the reasons for listing in London were pretty simple. We're a British company with a European asset. Why we listed in Australia was Australia is better at nurturing exploration risk. And I think now that we've proven there's a really good economic deposit there, and the scoping study demonstrated that, it was time to bring the company back to where it logically should be. And we're expecting over the next year or so, as the London market gets more familiar with what we're doing, that we'll see volumes in the London Stock Exchange exceed that on the Australian Stock Exchange.
Yeah, but you haven't raised any money coming into London, so it was just a purely an administrative operation.
It was. We raised 25 million Australian dollars about 5 weeks ago. That's given us all of the funding we need to take the project right through to project finance, and we put together that larger debt and equity package, which will be toward the end of next year. But we still think there's plenty of opportunity for London investors to get involved. Both markets are fairly fungible in terms of being, moving shares from one to the other. So we think that liquidity over time will grow.
Yeah. Before we take a look at the share price, I want to dig a little bit deeper, if you forgive the pun, into precisely what it is you're offering here. You spoke a little bit about the metals that you're looking at here. Yeah. How big is your patch of land in this area?
Look, it's quite small. It's literally just over 2 square kilometres. The reason for that is in Bosnia, you have to pay a rather large amount for a mining concession up front. In most jurisdictions, it's almost free and you pay a large royalty at the back. In Bosnia, it's the opposite way around. You pay up front and you've almost got no royalty on the project. However, we are going to pick up some more land soon. We have seen through the analysis of all that information that I mentioned earlier that there's some very prospective areas around where we are in Bosnia, and we're going to be going out and grabbing some more when we can. We're just working through some of those changes with government at the moment.
Have you got any big neighbours in terms of the mining industry? Anyone else looking for the similar sort of metals you're turning up?
Not in Bosnia. There is obviously in Serbia. You've got Zinjan, Rio Tinto, and many others. In Bosnia, because of the unusual system of charging so much up front, hasn't really encouraged junior explorers to get into that market. So we've got a really distinct first mover advantage, which we've been able to do based on the information that was made available to us. You know, like I said, I think Bosnia is, from an exploration perspective, prolific. You know, there are some elephant grades in there, and I think in this region of Bosnia where we're operating, there are a lot more tonnes to be discovered, and that's what we're going to do with that 25 million. We're going to drill extensively next year.
Right. Okay. Well, let's talk a little bit more about what you are hoping and how much drilling you're expected to undertake. 25 million. It sounds a lot of money. In the grand scheme of things, it doesn't quite often last as long as some people first hoped. First of all, how did you raise that?
Look, we went through the normal routes of going to a couple of brokers that were very familiar with the story in Australia. So it was led by Tamasis here in London,
right,
and Canaccord in Sydney. And we had strong support from the likes of Rick Rule at Sprott,
right, okay,
in the US, as well as a number of institutions in Asia, London, and Australia.
So you've got some big institutions on the books.
Yeah, we've got a few good names on the books there, and continuing to grow. We obviously have one corporate shareholder in Sandfire Resources.
Right, yeah. And they've increased their stake, haven't they, I think, along the way, is that right?
Yeah, they have done. They've been increasing their stake since the IPO in Australia back in May 2018. They had a 7.5% stake or thereabouts. They're now, we understand, about 16% as of basically last week. Yeah. Where it is today, I'm not quite sure.
And you're, of course, a shareholder as well, I believe.
I am, yeah, as the founder of the company. Yeah. One of the founders, three founders of the company. I still retain a significant stake, and I'm very keen to see this company succeed.
Yeah. So, scoping study done, feasibility study underway, I believe.
Yeah, pre-fees and fees are underway at the moment. We're doing some more metallurgical test work, looking at how we might separate out our copper. Very bullish about copper prices.
Right.
So I want to make sure we get a better payability on our copper. I think that will also give us a better result on our gold payabilities and recoveries. So that work's being done at the moment down in Cornwall. We did put out a scoping study based on our preliminary metallurgical work, and it shows that the project's very robust. It's got an NPV8 of over 900 million US.
Right.
The upfront capital is less than 180 million, and the internal rate of return is over 100%.
Right. Good time to look at the share price, I think, because bearing in mind what we've just been saying, I think actually we were just doing a little bit of calculation before we went to air. This August low from this year to where we are now is something like 90-odd% gain. This is the Australian listed stock, of course, having just come to London. This represents, I think, a market cap of about 160 million. So when you're talking about that 900 million, that's a dollar figure, of course, you're talking about. Where does this valuation sit on what you're offering investors as the long-term payback?
Well, look, we think there's, ultimately, as we continue to progress the project forward to production, that discount to the net asset value will close up, as you'd expect, based on the scoping study results. But I think more importantly, it's the exploration results. Yeah. The exploration results are going to demonstrate how big this can be. We've got now a lot of money allocated toward exploration next year. We'll be picking up some new ground. We're going to be drilling a lot of holes. Particularly where more recently we've drilled some pretty amazing holes that have really opened up the deposit. We've got a number of areas where we've now acquired more data that indicate that there is the potential for additional deposits there. And quite interesting, we did a laser-based ground survey, which is a very accurate survey, and with that we found old mines that have been constructed, probably in the Ottoman era. Oh, wow. And then we did some soil sampling on that, realised that there's good grades of metal in there, and we're going to be doing a lot of drilling on those areas as well. Yeah. This area is prolific. Yeah, 25 million. How long is that going to last? You're talking there about some sort of visibility on your expectations, but in terms of what you're proposing, and of course you've got to start building the mine. What sort of capex are you looking at in terms of longer term? Well, look, at the moment we're looking at about 170, 180 million US dollars in upfront capital required.
It doesn't sound an awful lot. That's to take you through to mine?
That will take us through to production, yeah. Right. So that's to build the project. The 25, well actually 30 that we've got in the bank will last us through to about mid-2021 based on our current exploration programs. However, we believe that toward the end of next year and early in 2021 we'll be putting together that package of project finance, and that's fundamentally why we came here to London now. It was so that, you know, London's got deep pockets in terms of taking assets through to production once they've been de-risked, and we know that there's an appetite in London to invest in projects in Europe.
Yeah, okay. Let's bring it all together and talk a little bit more about what we should expect in terms of some of the milestones you're looking for, because clearly when you're coming to London, you're looking potentially for a new investor base to get interested in this, but they want to know, if they put the money in, they want to know it's going to come out the other end with a little bit of profit. What are you telling investors in terms of presentation and your expectations and milestones?
Well, in terms of share price return, I think, you know, those de-risking milestones of we should receive our exploitation permit early next year, which is effectively our mining licence. We've recently received a lot of our environmental clearances and water permits. So these are the de-risking items on the project. As we put out a bankable feasibility study toward the end of next year, I think that'll give investors a lot more confidence, and we'll close up that gap between, you know, our EV and our NAV. Where we expect to see really sort of incremental growth in share price value, in market capitalisation, is through exploration results and the acquisition of new ground in Bosnia and Herzegovina that I think will really add value. Going into production, however, this mine, you know, it produces in its first 5 years of operation over $1 billion US dollars of free cash flow post-tax. You know, this mine is a little cash machine, and I think
what
if
are
we
the
can grow
risks
it,
to this, as you see? I mean, there's the more metals you discover, I guess obviously your costs are going to have to go up in terms of trying to separate all that out and then find ways to maximise the opportunities available. Obviously, that's an unknown at the moment, presumably, but it's only a positive unknown, presumably.
Yeah, look, I think the big risk for any polymetallic deposit is, you know, what you've got to produce concentrates, and which concentrates do you produce, and what metals go in which concentrates, and how do you maximise that revenue line? We've done a lot of work on that with a trading firm in Switzerland who's been helping us on the marketing side of it. We've got some great metallurgical consultants working with us in Cornwall, going through and actually creating those concentrates. We're really happy with the results we're getting today, but we think we can improve them. And so we've just approved a budget to do a next round of metallurgical test work. That'll feed into our pre-feasibility study. So that, I think, is the big technical risk, and is consistent with all projects like this. The other risk, and it's more of a perceived risk than a real risk, is that Bosnia is not a known mining jurisdiction. I think there's probably perceptions of some of its history where people don't quite understand the place. The reality is, we found working with government there very, very easy. They're open to questions. They assist you in doing your application. So we've had a number of our permits awarded. There's always a number of permits for mining projects, but we've had most of them awarded very, very quickly after application. And that's because it's a very cooperative approach between the company and the three levels of Bosnian government, being the federation, the canton and the municipality.
One final question about you. Have you done this sort of thing before? You're a numbers man, aren't you? You're not a geologist as such.
Yeah,
Presumably you've got a team behind you as well working on this. But
I do have a great team behind me. Yeah, my background, I was working as a fund manager for a South African investment bank who had a lot of junior mining equity and debt investments. And then I went out to run a small uranium project based in Turkey, which we took over when it was, it was in a pretty weak state. It had a market capitalisation of 3 million or 3.5 million. We sold it 2 years later for 35.
Right.
So
okay. So you've
good return, but
you've done that before.
very small compared to this.
And a good team behind you.
Yeah, great team.
Yeah. Good. Look, Paul, we've got to leave it there, but thanks indeed for joining us.
Cheers.
It's a pleasure to talk to you. Paul Cronin, the Chief at Adriatic Metals, having just listed here in the London markets.